So what I'm going to do today is I'm going to be taking you through just the basics of finance. So I know a lot of you are either in small businesses or just starting out, and I'm going to take you through just understanding the thinking behind the making money and how one should look at it. So I'm not going to take you through the technicalities. I mean, people study accounting and finance for 3 years and some of them still don't understand it. But before we get going, I just a very quick kind of 30 seconds each. I just want to see who's here and maybe where I can focus it to. So if you wouldn't mind each one of you just coming on, unmuting. If you can put your camera on, you can put your camera on. If you don't want to, you don't have to. But just very briefly, your name and the type of business you're in, so I can see what you're doing, how long you've been going, and then I can kind of tailor it more towards you specifically. So I'm actually going to stop sharing the screen now. And yeah, let's just, in fact, I'm going to call out your names. Let me just look at the list of participants so we have it in some form of order. So Philip, we can start with you.
Okay, so my name is Philip Nochemowitz. I run my own business called the P Factor Food Company. It's a proprietary limited company. And basically, I operate as an independent contractor to the food industry.
Great, excellent, thank you. And Keslin?
Hi, my name is Keslin Lefort, and I don't have a business yet, but a friend and myself are thinking of starting a business, an online store.
Great, excellent, thank you. Laura?
Hi. I've just started a new business where we hire out outdoor movie screens for hire. Inflatable outdoor movie screens and a jumping castle. And I was in travel for 30 years, but that kind of got put to bed with COVID. And now we're reinventing ourselves.
Wow, fantastic. So the travel people do is now traveling up and down, jumping when they're jumping on your jumping castles.
Basically.
That's great.
That's as heavily as we're going to get now.
Fantastic, thank you. Lorato?
Lorato is with Ort.
Hi,
Lorato.
Okay, she can still learn. Okay, Lorna?
Okay, I've been retrenched as a bookkeeper and I haven't got any business, or I don't even know what I'm going to do now for the rest of my life.
Okay.
I'm
We'll find
not
something.
feeling, I'm not feeling confident in what to do.
Okay.
Yeah, thanks.
Just to fill in with that we often live in life, we live in default. So whatever we're doing, we're being continued to do, and we don't change. It's only when we're forced into a situation like you are that we look at change. And sometimes when you look back, you say, wow, why didn't I do that earlier? So maybe, and it feels very scary before you start, but maybe that's where you're at the moment. Okay. Thank you. Neville?
Hi, I'm Neville Golden. I'm an industrial psychologist. I spent probably 30 years in corporate, and about 8 years ago set up a small, very part-time consultancy. So,
great, excellent, thanks. Nati?
Nati, I think you might be on mute.
Not it's Thai, ne?
Oh, sorry, in Thai, yes.
Yes. How's it, David?
Oh.
I don't usually use that name a lot. You know me by France.
I know you by France, yes.
Yeah. So look, David, what we do, we actually provide civil engineering services. So that's what we basically do.
Okay.
Yeah,
excellent.
and yes, looking in the space of energy on installing solar panels.
Right. Excellent.
Yes.
Thanks, Franz.
Yeah.
Odette?
Thank you. My name is Odette. I have been doing property rental management for a long time, over 20 years, and it's something that I know very well, but I want to do it now from a different point of view, not as submissively as I used to, so that I will attract a different mindset, and maybe I should change completely, but I am definitely transforming. So thank you for your assistance.
Great, thank you. Stuart?
Hi, David, and thanks, Orjet. I run a communications company that works in the nonprofit sector. And as we're experiencing growth, I'm interested in, well, I need to be interested in the accounts management. I've set up my own running accounts, managing that, trying to budget. And yeah, that's why I'm here. Thanks very much.
Right, thank you, thank you. Tebogo? I think you're with, Tebogo's with Ort, isn't it? No.
No,
Okay.
I'm not.
Right.
Hi, good morning, everyone. My name is Tebogo Matolo. I'm wearing two hats today. As you can see with my background, I work for Black Umbrellas, which is an enterprise and supplier development organization that assists small businesses. And I also own my own company where I focus on wellness. So we're selling everything from alkaline water to pressure socks, arthritis gloves, anything and everything to do with wellness. That's my side hustle. But so I'm here today for myself and also for the SMMEs under our incubator. Thank you very much.
Right, so you're not wearing two hats, you're wearing a hat and an umbrella, but...
There we go, yes, thank you.
Okay, Valerie?
Hi, David.
Valeria,
Valeria, yeah. I am, I've been with Orjet for some time. I'm a life coach and I do baking. I just want to expand now because I see there's new opportunities. So I'm here to learn as I've always done. Yeah. So thank you so much.
Right, thank you. Vicky?
Thanks.
Hi, David. I'm Vicky Hammond. I'm an estate agent and I specialize in sectional title, Ilovo, Athol, Melrose and surrounds. I see myself as an area agent. I come from a sort of arty background, so I'm learning about business because being an agent is like running your own small business. So the more I empower myself with business knowledge, the better I can serve my clients. And I'm all about client services.
Great, excellent. Thank you. So thank you so much. Is there anyone else who I haven't called up who wants to share? I'm not sure. I think I've been through everyone on the call. Great. So guys, I've got a little bit of a background and of where you're at. So let's move on, and I'm going to take you through just the basics and the thinking. So first of all, when you look at this, what do you see there? And just call it out once you think you can read what it says on the screen.
Someone thinking.
Correct. So it's someone thinking. And what is the words above the thinking head say?
It's a question mark, and the expression on the mouth, it looks negative. It looks like a big concern, a worry, frustration.
Okay, and the word above, anybody that starts with IN? What does that word say?
Information, no way.
Information, nowhere, correct. Did anyone read anything else?
Information now here.
Correct. Which one's correct though? I said correct and I said correct, but are they both correct?
Both correct.
And that's also correct, Philip.
Maybe we've got a lot of information we don't know what to do with, or we don't know how to apply. And on the other hand, we're in no man's land.
Yes. And so I find this a lot. Whenever you're looking at a business, no matter what your business is, if it's an estate agency or if whatever you're doing, when you're in a business, there's lots of information around. Some people don't see that information. Some people look at finance, for instance, and they're given the numbers. And they look at this and it doesn't talk to them. It says nothing, and that's the information nowhere. Other people look at the numbers and they understand exactly what's happening in the business. Just they don't even have to be at the business. They just see the numbers and they know what's happening. I don't know if any of you watch of these shows. There's a TV show called Undercover Boss where they talk about people who are running the business. They sit in head office. They don't even get involved in their business, and it's the boss, and yet they go undercover and they go into their own businesses. And I'm always surprised how little they know about their own business. It's because they run the entire business just looking at the numbers. So I don't want you to be like that, but what I do want you to be like is that when you see the numbers, they start talking to you. They start showing you bits about your business that maybe you don't know. Okay. So it's not really purely about taking finance and understanding income statements and balance sheets. I'm talking to you more today around business acumen. And it's about understanding, how does a business make money, and to make you be aware of that so that when you make business decisions, you actually make better business decisions. Here's a picture of myself and Stephen Covey. I had the opportunity to meet him, and I'm holding his book and he's holding my book. But what's interesting about this is what Stephen Covey said. Now, that book he wrote, The 7 Habits of Highly Effective People, is a very, very good book to read if you get the opportunity. It's actually sold over 15 million copies around the world. But this is the important thing about this is what he says. If you pick up a book and you read it, you've only got 10% of the knowledge. It's when you hear and see it and discuss it and experience it, that's where you learn the most. So even a talk like this, even if you understand everything I'm talking about, you've also got 10% of the knowledge, maybe even a little bit less. But it's when you start using the things that I'm going to tell you, that's where your knowledge grows. And we learn by doing. I often say to people who, let's say, can't ride a bicycle or don't know how to swim, if I gave you a book on how to swim and you understood every word in that book, how confident would you be of then jumping into the deep end and swimming or trying to swim? And you definitely wouldn't, because the theory is one thing, but we learn by actually doing, by using that theory, and over time we develop our strength. So even with finance, same thing. I'll give you the theory. Where you learn the most is by doing, and by doing it more and more, that's where you become better and better and stronger. It's like going to the finance gym, and for the first 6 months you feel like you're doing nothing, but then you develop the skill to do it. If you don't do something, you won't get good at it. People avoid looking at the numbers in business. That's the biggest problem. So hopefully this is the beginning of your journey of looking at those numbers. And when you look at it, you can do business in many different ways. So you'll have a businessman who goes and he buys a watermelon for one price and then sells it for a different price. So in this example, he bought a watermelon for €1. He's now selling it for €1.50. What allows him to sell that watermelon for more than what he bought it for? And if you think about that, what would give him that opportunity? And the opportunity might be that he sells it in a different way, that he's making it easier for the person to buy, and they're going to pay him for that. When I say easier to buy, instead of everybody having to travel down to the farm to get it, he's bringing it to where you are. Maybe he's selling you the watermelon, not the whole watermelon, because you don't want the whole watermelon. Maybe he's selling you just a slice of that watermelon.
Dave, you're on mute.
Yeah, sorry, I put myself on mute. I had a little cough there. So I try to hit the mute button in time. And so you take the watermelon and then you maybe sell only a slice of the watermelon. But you can look at the business differently. Instead of looking at yourself and your identity as being a watermelon seller, you can look at yourself as an entrepreneur who looks at it slightly differently. And you can look at it like this, for instance, that you're now not selling the watermelon, you're selling watermelon juice. You don't see yourself as a watermelon seller, you see yourself as a drink seller. And now you're redefining the business you're in. And it's about looking at the business you're in and saying, can we redefine the business? Can we look at it and be offering something that's slightly different, but then now adds more value or different value, and we can earn more from that? This watermelon is now watermelon juice, and instead of selling it for €1, you can now potentially sell it for €5. Also, another little thing with this picture that I love is, can you see this got a little umbrella in the glass? And the question is, does that umbrella change the taste of the juice? And you'd say, obviously not. And so the question is then, why even put that umbrella there? Well, it's because it doesn't change the taste of the juice specifically, but it changes the way the juice drinker tastes the watermelon. What do I mean by that? If you serve the same juice in a beautiful glass with an umbrella that makes the person feel good, they will taste that feeling better. Rather than if you gave it the same juice in a dirty glass in a broken, messed up paper cup, the perceived taste would be different. And whatever you're doing, whatever business you're in, okay, you need to think to yourself, what is my umbrella? What is my unique thing that I'm doing that makes the person who's using my service feel better about themselves? And we've all got that. And it's people have used it over time of your USP, your unique selling point, or your going the extra mile. But it's very important. I like to look at it. What's your little umbrella? And whatever business you're in, I would like you to think, what is that extra thing I'm doing? And it can be from, as we got here, from a psychologist. What's that extra thing that I give? Or from an estate agent, or someone doing a side hustle. It could be any of those things. So I'm going to cover a little bit around income statements with you so that you understand what the income statement is. I'm going to go through some basic ratios, and then I'm going to talk about what's a financial dashboard so that we can monitor this. But again, I'm going to do it in a slightly different way. So first of all, if you're watching a whole lot of kids playing soccer in a park, how do you know who's winning? Can any of you tell me, how do you know who's winning?
Look at their faces and their body language. There's that bravo, I've got it, I'm there.
So you can look at them and you can say, well, now you know who's winning by just looking at their faces. Okay. Any other way of knowing who's winning?
David, I think, yeah, the confidence will tell. Huh?
The confidence will tell. So you
Yeah.
kind of you can kind of guess maybe who's winning.
That hand in the air.
Say that again.
They had one guy in the front from our side. He's got his hand on the right of the screen up in the air. Yay! We are on the winning side.
It could be.
Yes. Yeah,
But
true.
these are all things that you can estimate and guess, but you don't really know unless there is a scoreboard. Unless there's a board that says this team's got 0 goals, this team's got 3, 4, 5 goals, whatever it is, then you can be 100% certain which one is winning. And when we look at finance and when we look at income statements and balance sheets, that's the scoreboard of business. That's how we monitor who's winning. If any of you had the I was going to say the displeasure of watching South Africa play soccer in the past. You used to have these teams that dribble the ball so much and they pass brilliantly, but they never go towards scoring a goal. And when you look at soccer, it's not who had the most number of passes who wins the game, it's the person who scores the goal. And it's interesting, it actually tells you what's meant to happen. It's the goal. We need to know in business, what is our goal? What are we trying to achieve? Because we're also in a game like soccer. But is it, if you're playing in a park like this, maybe these guys are just kicking the ball and their particular aim is not to score a goal. Theirs is to dribble, to see how many times they bounce the ball maybe. Same with us. When you in your business, you need to know what is your purpose. Okay? Is your purpose just to help people? So I personally, in my business, I've got different aspects. My purpose in my training business is to train people and to earn a living. My purpose today is not to earn a living. I'm not doing this for money. So if my scorecard, if I looked at my income statement over here and I'd say income 0, I'd go, what are you doing? Because I have a different purpose. So the first thing is to understand what is your purpose when you're doing something, and then whatever that purpose, monitor it to see that you're achieving what you want to monitor. And in most businesses, when you're in a business, yes, you want to add a service, you want to help people, that you need kind of, that must be the driving force. But besides that, you want to earn a living. And what's your purpose within the business is how do you monitor that? And it's, there's a saying of what you measure gets done. And so you need to measure things and know where you want to go. And that's what I'm going to take you through a little bit today. So here's a 12-year-old business making bracelets. In fact, it's not a 12-year-old business. It's a business of a 12-year-old. This 12-year-old happens to be my daughter, and she's gone into a little business of her own where she takes these little beads and she puts them together and she makes these little bracelets. And she is now selling them at school to friends, and she's actually opened an Instagram account to start selling that business, start selling these beads. So the first thing that you need to look at is, how does she monitor if she's doing well or not? So, what is the key in her business and in any business? And the key is that you need your returns to be greater than your cost. If you're in a business and one of your goals is to make money, you need to make sure that the money that comes out at the end of the day is more than the money that goes in. So my daughter will go and buy the beads, and then she sells it. If it costs her 100 Rand to buy some beads, and then she sells that for 50 Rand, she's going to be losing money. Okay, because she's got other things involved. What's the problem when only looking at returns are greater than costs? Is that we might miss a whole lot of things. It sounds easy. I pay 1 Rand and I get 2 Rand back, and now my returns are greater than my costs. But there are complications that come into this. One of those complications is, maybe in the short term, you're going to be losing money. Maybe when you set up a business, initially, you're not going to get the returns. And then you say, well, this is not a viable business, but in the long term, it might be viable. So there often are times where when you start a business, you make losses for a while, and then you make the returns. And the question is, can you sustain yourself during that time? Maybe there's a time delay. Maybe I'm going to be selling my product and I only get the money in later. Maybe you don't even know all your costs. So I think that I'm getting returns, but I'm not. Why? Take this example. So my daughter decided to sell this, and her name's Tally Rose, and she is 12. And she decided she wants beads. So she said, Mom, please take me to the place where we can go buy beads. And we went, and they bought beads. And let's say it cost her 300 Rand to buy the beads. And she came home, and I said to her, well, how much did it cost you? What are your starting costs for your business? And she said, 300 Rand. And I said, no, it's not. And she said, why? And I said, what about the petrol that Mommy spent to take you there? And she said, but that's Mommy's cost. That's not me. I didn't have to pay Mommy for the petrol. But if you're looking at a business, these are your input costs, and you need to make sure that you got the input costs involved. I said, well, you didn't pay Mommy for the petrol. Did you at least pay Mommy for the service of taking you there? And she looked at me very strangely. And if you're in a business, you got to pay personnel, the person involved in it. And then you got maintenance on the car. And then you've got the cell phone costs. And then you've got, what about paying rental on the room that you're in? And maybe what about the time that you take to make it? And maybe if you're getting lots of orders, you got to pay other people. So when you're looking at this, part of our problem is first of all, you have to understand returns are greater than costs. What we don't understand often, and I find this more in smaller and smaller businesses, that we don't actually know what all our costs are. And some of those sneak up on us at a later stage. And so what some people do is they just price something at a huge price just to make sure that they're covering all the costs. But then sometimes you can't outprice the rest of the market. Sometimes you can, if you're offering it as a unique service, but sometimes you can't. So the thinking needs to be, returns need to be greater than costs, and understanding that your costs are a whole lot of other things that you need to take into account. And also that the timing might not be exact. Okay. And then when you look at all those returns, not only do we look at it as, well, I made more money than it cost me, but if I make 1,000 Rand and I only invested 100 Rand, then I'm making a return of 1,000 on 100. I'm making 10 times my initial investment. If I made 1,000 Rand, but my investment was 1,000,000 Rand, then my return, 1,000 as a percentage of 1,000,000, is very, very small. Then my returns are not worth it. And that's the next level up that one has to look at. Any comments or questions with this so far? Have I lost anyone? I think we were more participants. We won less than when we started. So I have lost one person. But of those who are here, any questions? Nothing. Okay, great. So I want you to look at this picture and tell me, what do you see in this picture?
Yeah.
Zebra and
Honestly,
lions.
So a lot of
Okay.
people would just see the zebra, but can some of you see the lion in the middle?
You can see the line in the middle, but it looks like crowdfunding to me.
Absolutely. So
Yeah. Yeah.
this is, you see what you focus on. If you focus on the lion in the middle, that's what you see. If you focus on the zebras, that's what you see. And any business is around, what are you focusing on? And what you focus on is what you do around it. And I'll tell you what I mean in a second. So the first thing, and I've mentioned a couple of these things, the first thing is you need to have, in whatever business you're in, you need to have some key ratios. You need to have a key ratio about your business. And some people, when they hear the word ratio, their mind shuts down and they don't know what I'm talking about. All a ratio is, it is not difficult. All a ratio is one number divided by another. It can be any numbers. You create your own ratio. Whatever your business is, you need to have a handful. That means 5. You need to have at least 5 ratios that you look at on your business on a weekly basis to determine whether the business is achieving what you want it to achieve. Every business will be different. Those ratios will be different based on your business and what you're trying to achieve. Okay? Do I look at purely the money I'm making? Do I look at the service I'm giving? And let's take the psychology business that you've got a practice and people come to you, clients come to you. Do you monitor the number of clients per week? That's a ratio. Do you look at the amount of money you're earning per week divided by the number of clients? And you get your average income. It could be completely different. So first of all, you need to all look at your business and say, what are the key things I'm going to focus on? And then you need to set goals for those so that you take those ratios and you say, it's this, but I want it to be that. And what do I do to move towards that? Let me give you a very, very, very unusual ratio. It in fact was Raymond Ackerman from Pick and Pay many years ago had this ratio. And the ratio was, again, I've never seen it. I don't think you'll see it in any finance book. I don't even know what he called it. I'm going to call it the frozen chicken ratio. He did a ratio of sales in Pick and Pay. He took the sale of frozen chickens divided by the sale of other meats. And he got a ratio. And you'd kind of look at this and say, well, that's ridiculous. What does that tell us? He knew by doing that ratio what was happening in the economy. So he took the sale of frozen chickens divided by the sale of other meats. Why? Frozen chickens are the cheaper meat. The other meats are more expensive. If percentage-wise, people are buying more and more of the frozen chickens, it means they've got less disposable income. And therefore, he then used to look at that, and then he used to change things he did in the business based on that. If that number got bigger, there was less disposable income, he would then move the cheaper stuff to the front of the store. If it was the other way around, he'd move the more expensive stuff to the end of the store. And so you need to create these ratios that you're looking at. Often companies create lots and lots and lots of ratios, and sometimes too many, because then you can't do everything. You can't be everything to everyone. You need to do this, and then you follow the what, the so what, the now what. The what is the ratio telling you? The so what is what does that mean? So in this case of Raymond Ackerman, the what was the ratio that he did, frozen chickens divided by other meats. The so what is, so what does that mean? It means that the economy is contracting, there's less disposable income. The key thing that a lot of people miss out on is the now what. And the now what is, now what do we do about that? Now we know that the economy is contracting. What do we do about it? What was bringing the cheaper stuff to the front of the store when that ratio got bigger. So I'll repeat that again. You need to go and create some kind of ratio that you understand what's happening in your business. You need to then look at it, and the ratio is the what. The so what is, so what is that ratio telling me? The now what is, now what am I going to do based on that information? Okay. And again, there's no right or wrong. And in fact, you can create 5 ratios, use them, see if it changes the way you look at things. And then if it doesn't, if one of those ratios don't really talk to you, you can change that over time. And I've done some work with people where we create these ratios. And over time, those ratios change Continually, they're changing or tweaking one or two or the other. Okay. A lot of businesses, they use the ROI, return on investment, but other businesses use RONA, return on net assets, return on capital employed. They're all looking very similar. What's the return? What am I getting back for what I put in? But they tweak it slightly differently for their businesses. Now, those ratios I've just mentioned, for some of you, you might not know what am I talking about, but it's just one number divided by another. So even those complicated ratios are just one number divided by another. Sometimes they're taken from income statements and balance sheets where you need to know where it fits. But for your own business, you need to understand it. It's no use somebody else giving you a ratio that you don't understand what it's telling you about your business. Now you take those ratios and you put them in what we call a financial dashboard. And a financial dashboard is just taking those ratios and putting them into a graphical format, because as humans, we follow more what we see than what we hear or what we read. So if you can take something and you've got a list of numbers, but you move it into a graph, then that graph starts talking to you. Okay. Now, here's an example, not of the graph, but of some numbers. This is from Standard Bank. And what Standard Bank did is they looked at the entire business. Now, as you know, Standard Bank is massive. They decided to focus on only 7 ratios. This was 7 key ratios of what they wanted to achieve throughout the whole bank. These 3 ratios related to growth. So they said they want to check how they're growing. They've got 3 ratios. These 2 ratios looked at what was important to them, something which they called resilience. And then they had another 2 ratios which looked at the returns. So you're not just creating ratios, but you're saying, what part of what I'm looking at is that ratio focusing on? And then once they knew what they wanted to look at, they looked at their targets. And this is what their targets were. So they wanted their Africa region's contribution to be greater than 30%. Okay. So part of their goal was to grow into Africa and for those regions to be bigger than 30%. Not only did they have their targets, but this is what their achievement is, what they achieved. So this was for the first half of 2018, and they actually achieved 32%. They wanted it to be bigger than 30%. And can you see there's a green dot next to it saying that it's good? So you need to do it that it's really simple, that a 10-year-old can have a look at this and can see whether these things are good or bad. Let's look at the second one with a red dot. It said cost to income ratio approaching 50%. They wanted that to approach 50%, and it's at 57. Now we think, well, 57 is more than 50. Why would it be red? And it's just because this ratio is your cost to your income. What is the cost to the income? The smaller the number, the better. Most companies look at return on investment or returns. They look at it this way around. For some reason, banks and insurance companies use this ratio, cost to income, where it's the other way around. So you need to know it's not just looking at is 57 bigger than 50. It's looking at an indicator with a little traffic light of good, bad, or average. It makes it obvious. And then they could have taken this and moved it and changed it into the dashboard if they wanted to. Here's just a dashboard. And this was a dashboard that, in fact, in the early days, you can see in the top right-hand corner, if you can see it there, that's from the 21st of January 2020. This was about the COVID-19 cases in Singapore. This was before we even had our first known case in South Africa. They set up a dashboard, monitoring a whole lot of different things. So if I focus in on it, they looked and they saw, for them it was important to monitor, is it more men than women? So here you've got the gender. And then they've got kind of the number of cases on a daily basis. They had confirmed cases in ICU, etc. They had your average age of people. You had imported or local transmission. Imported means people flew into the country with it. They'd be able to see where that is coming from. And then you've got over here a map and where the different areas were that people contracted it. And you could very easily see it was the Grace Assembly of God and it was at a private dinner function. Immediately they started to see the pattern that when people get together, that's where it spreads. And so it was just a very important thing for them to take it and put it into a dashboard so they can see what's happening. We can and we should be doing very similar things with your business. But before you do this, you need to know what are those ratios that you're actually looking at. There are a couple of things or a couple of ratios that I've seen over time that people struggle with. And the calculation, and these are simple calculations, but they're crucial. Excuse me. The first one is calculate a percentage increase. When we're looking at 1 month compared to the next month, how do we know whether it's got bigger or less or smaller? So I just want to run through this for you so that you know how to do this. And I'd like you, if you can just take out either your cell phones or your calculators, and let's do a calculation, and let's calculate this. So if I ask you, for instance, and in fact, let's just do a calculation. I'm going to ask you to calculate if you have 150 and it goes to, and let's make it 201. What is that percentage change? So you're going from 150 to 201. How would you calculate what is that percentage change? So I'd like you to just quickly do that for a second. And I'm not going to ask you to call out your answers, but if you can just look at your answer and tell me what did you get as a percentage, or think to yourself, what did you get as a percentage? I'll give you
Should we write it down?
Well, you can, Franz, you can call it out if you want. What did you get?
I got 134%.
So you say it's 134%. Okay, I'll reveal to you just now. Anyone else want to call out their answers?
I just went marginally over. I went up to 201.15 at 34%. Just yeah.
Okay. So you say 34%. Okay. Any other answers? So
I got 25.
25%. Okay. So these.
I got 74.
How much?
74.6.
74.6%. Very specific. Great. Excellent. Anyone else? Okay, so even if we haven't got anything else, I think you're already starting to see that you're looking at the same calculation and people are getting 4 different answers. And some of those answers are drastically different. The smallest we got was 25%. The biggest was 134%. Those are vastly different. And then we got 74.6 and 34. So let's go through this. Obviously, we need to do this. So let's go through how one would do that calculation. So your first thing is to calculate the increase or decrease amount. And so it went from 150 to 201. If you take 201 minus 150, you will get 51. That's the increase or decrease amount. Then you need to say, where did we start from? What some people do is they divide the 51 by the end point, but you need to say, where did we start from? And you divide that by that and you convert the answer to a percentage. So what you're really doing here is you take 51 divided by where you start from, which is 150, and you get the answer of 34%. This is a 34% increase. Okay. By the way, if you get an answer of 100% or bigger than 100%, that just means if something's grown by 100%, it means it has doubled. And so we can very quickly see that. I think the calculation, for those of you who got 134%, what you did, there's another way of doing this, is you can take 201 divided by 150, and you'll get 134%, but then you need to take away the 100, and then you're left with the correct answer of 34. So first of all, just for your own purposes, this is a way of doing this calculation, and it's an important calculation because when you're looking at finance, you might be looking at your actuals versus your budget. What did you think you were going to do? What did you do? And the way we calculate the difference is this exact same calculation again. So this is a crucial calculation that it's really simple, but if you don't know how to do it, then you don't know how to do it. No matter how simple something is, if you don't know how to do it, you can't do it. Now, hopefully, you know how to do that. So let's go through. Any comments with that before I now take you through understanding actually the income statement? Any questions or comments?
I think the steps are clear. It was difficult for me to calculate. That's why I didn't come with a number. But given the steps now, it downs. I see the light. Thanks.
Excellent. So, as I say to people, it doesn't matter where you come from, it's where you're going to. That's important, as long as you're now on the right track. Great. Excellent. So when we look at an income statement shows you the sales, the cost, and the profit that you've made over a period of time. And therefore, it will have the heading for the period, from one date to another. Just by the way, I'm not going to get into balance sheets, but when you look at a balance sheet, your balance sheet says as at. It's on a particular day. What's your balance on that particular day? And so when we look at an income statement, what we're really trying to do is we're looking at starting what are your sales, and then we take off cost of sales, and then you get to your gross profit, and then all your expenses, etc. So you're working downwards. An important thing just to understand in terms of an income statement is the split between cost of sales and expenses. Your cost of sales is your cost that is directly related to the item that you're selling. So, for example, the costs for my daughter when she starts doing her bracelet business, the cost of all the little beads, that's part of her cost of sales, and all the other expenses, like if she had to pay rent or telephone or other things, it's related to the business, but it's not part of the product. That would be your expenses. So and the reason we do that is that now we start doing ratios within this. If I had to look at an income statement and do the ratios related to this, I would take what is my gross profit. So after I take those direct costs into account, how much am I left with? Your gross profit as a percentage of your sales. Another ratio one could do is after I've taken off all the other expenses, it's what am I left with at the end that is now as a percentage. And your gross profit is very related to the type of business you're in. So if you're in thinking of, let's say, the petrol business, petrol's quite expensive, but the petrol stations themselves, their gross profit margins are tiny. It's like 6%. When you fill up with petrol and you give 100 Rand, the petrol station themselves are only making about 6 or 7 Rand. The rest of it goes to the costs. And the only way that a business like that can make money if they're only making 6 Rand is to sell a lot of it. They're in what we call a volume business. They have to sell millions and millions and millions of liters to make some profit. Other businesses are what we call a margin business. They need to make a great profit margin because they haven't got that volume. And so what happens in that particular case, let's take an example like a restaurant. The gross profit in a restaurant, your gross profit percentage needs to be about 65%. So if you take your salad sells for 100 Rand, the ingredients can't cost more than 35 Rand. So that you're left with 65 Rand, 65 out of the 100 gives you that gross profit margin. So in a restaurant business, if you at gross profit, if you are below that, you will go out of business because you've got lots of other expenses involved. I saw there was a question that popped up. What about a consulting business? So in a consulting business, you don't have so much as your cost of sales. So there it's more expensive. So expenses. So you need to then look at different categories of your expenses. So consulting company, we don't really, service business, we don't really look at the gross profit per se. Any other comments or questions? Yes.
Yeah, can I ask you, in terms of a business where I purchased a once-off the equipment, so I bought the screens and I bought the projectors and all of that, and now we are hiring them out. So that cost of sale is not on each sale that I do. It's more like a service business, but I had to make the initial investment to buy the equipment. How do I incorporate that cost of sale into each like transaction, for example? Or do I even?
Yeah. So you would need to, so first of all, you would need to look at how long do you think that screen is going to last for? And or how many times can you rent out the screen? So let's say you buy it and you think it's going to last for 100 uses. Then you can take 1/100th of the price and put that through as the cost, because it's almost like your product is deteriorating 1/100th of a time every time you rent it out.
Okay, so I can't quantify that. I don't know how long it'll last.
No. So let's say the screen costs you 100,000 Rand.
Right.
And you think you can rent it out 1,000 times. Every time you would rent it out, you put as if there's an extra cost of 10 Rand into this. Otherwise, you're not getting kind of the return on your investment.
Okay.
So you would need to almost, and if it lasts longer, that's great. But you need to say for me, I would look at your screen and say, maybe it'll last 100 rentals. I need to incorporate 1/100th of the cost as an expense, so that I'm using that as part of the expense, because otherwise you're not paying to be able to buy another one at a later stage. Otherwise you think you're making money, but then all of a sudden you've got this huge cost of having to buy it again.
Okay.
Yeah.
Thank you.
Yes.
I've asked a question on the chat box, but just listening to that conversation you had now with, my thinking is, as a contractor, how would I the cost of a legal contract with a client where I've taken legal advice and had to pay them? Would I be able to charge each contract out and build that into my cost of sales as a term? Okay. And how would I do that?
So I'm not 100% sure of your question, but just correct me if I've understood it or if I haven't understood it. So you're saying you go and you get a whole lot of legal
every
and legal
contract,
advice that costs you some money. And now, when you're using the service, how do you split that out per person? Is that correct?
per client, yeah.
Right, yeah. So again, one could look at it in terms of when you've got a cost like that, it's almost like an overhead cost that you can't split out. So we're also looking at costs. Another way of looking at this is you could look at things that are variable costs or fixed costs. Variable means it varies according to the sales. Others are costs upfront. So what you would need to do with costs like that is you need to look at the business over a period of time. So over a year. So rather than per client, you can then do over all the clients to get your estimated costs of doing the business. So that would be incorporated as an expense up front. Then you would work out what is the percentage that you would need to allocate to each client, because it takes that into account, but indirectly. So I would look at it overall, and then I'd say, well, incorporating that's the percentage that I would use as if it's a cost of sales. So it's not really a cost of sales, but I'll work out what that percentage of all these overhead costs are and incorporate that as assuming I know what the number of clients I'm going to get. Then I can allocate that as a cost of sales in inverted commas.
Just, okay, my next point here I've raised in the question, and just looking at your share here, you talk about taxation. And my question on this in the chat is there merit in calculating taxation as a ratio, as a general point of information in terms of how you in terms of the business operation?
So the only merit in doing that is that at the end you can, and in fact, I'm going to answer your question on the next slide. Let's get to the next slide. It'll actually answer it. And if it doesn't, you can ask it again.
Okay, thank you.
So this is the next slide. So what we're looking at, what I'm saying is that you need to take your sales, there's your sales, the yellow bit, and we're taking each aspect, your cost of sales, as a percentage of your sales. And you take each one of these as a percentage of your sales, and what it does is it takes it from a big amount and shows you how it gets smaller and smaller and smaller. So, Philip, to answer your question, that tax we take as a percentage just because we're now reducing it by that amount. And so what you're trying to do is trying to understand, I made R1 million worth of sales, but I'm only left with this little bit at the end. And in finance, there's a saying that says, turnover is vanity, profit is sanity, but cash flow is reality. And what that means is if you're running a business and you only look at the turnover, you're only looking at your sales, that's vanity. You're showing off to others or to even yourself. Is the fact that, wow, R1 million worth of sales, that's great, but you can't live off that R1 million because you've got to pay all these expenses, and your sanity is your profit that you're making, but cash flow is reality, because not only do you need to make profit, but you need to get that money coming in the right time, because cash flow is reality. More businesses go bankrupt for cash flow purposes than any other purpose or reason. You can go bankrupt because the money's not coming in at the right time. I want to show you this exact same thing in another format that might make more sense. It's like this. Your sales is a big bottle of wine. You get all this wine, but before you can drink it, you've got to put it through a filter. And as you pour it into the filter, there are holes in the filter and wine seeps out. Your cost of sales, your taxes, your expenses, all you actually can drink is that little drop at the bottom. And that drop is often just a small percentage of what your sales is. Okay, I can see somebody's asking for my email address. So I will give you the email address and you can contact me if you want. Yeah, I'll put it in the chat. So it's there, okay. And again, let's look at this income statement in another format. Is you start off with your sales, and then you take off your cost of sales, and then your gross profit and expenses and profit before tax, etc. And so it gets smaller and smaller and smaller and smaller. And maybe, Philip, another way of asking your question is, why do we care of where it all goes? Why don't we just say, these are your sales, this is what you're left with at the bottom, and that's it? Why do we have all these different divisions? And we need all these different divisions for analysis purposes, purely so we can see what parts of the business or what parts of this process did the money go. Did we spend more on cost of sales or more expenses? And is it, we can compare one period to another, or we can compare our company to another company. So that's what you need all of this for. Okay.
Thank you.
Can I ask, please? Oh, sorry.
Yeah, go for it. Yeah.
During COVID times, the salaries are being kept the same, and the sales are less. You know, the point of sale is less. Does it need to change because of COVID? It's very hard to make the sales more, but people want to earn the same salary, so it's a problem.
Yeah. So, Odette, you've got to look at your business and see what can your business afford or not afford. And also linked to that is, if you pay less, you might lose the actual people who are bringing the money in. And again, it's just, you know, Winston Churchill had a quote that I think has been quoted a lot around the fact that in times of crisis, it's your opportunity. And it's the opportunity to change. It's the opportunity to look at things differently. And, you know, as I said before, we live in the world of default, that we just continue doing what we used to do. Is there a way of doing things differently? And then you can have a look from a costing point of view as well. For my own purposes, I do a lot of training. I used to spend a lot of time traveling in Joburg and also out of Joburg. If I was traveling in Cape Town, for instance, I would need to get to the airport. I used to have to pay for an airplane ticket. I used to have to pay accommodation. I used to pay travel for hiring a car. I now do the same lecture online. Do I charge the same, or do I reduce the costs? Or do I charge more, or do I do it in a different format? So previously, I used to lecture, I used to travel there and lecture for 2 solid days. Now, to the same client, I could do a series of 8 different lectures of 2 hours each, maybe, or 2 or 3 hours, and then people can use the information in between. So it's a different model. And then how do you charge for that, etc.? So there is no one thing that fits everybody. And it's just a very important quote that it takes time to understand, simple quote, but it takes time to understand it. If you understand it, it makes sense. Warren Buffett, who's one of the wealthiest people in the world, had a quote. He said, "Price is what you pay, value is what you get." And price and value are not the same thing. So let me unpack that a little bit. If you paid for the same item, you could pay 200 Rand or 100 Rand. Which one's more expensive? And we would normally say, well, 200 is more expensive than 100. And what Warren Buffett's saying is, no, you can't just look at the price and say that. If I pay 100 Rand for something and it doesn't work properly, then it's very expensive, because I paid 100 Rand and I've got no service for that. If I paid 200 Rand for the same thing, but it works unbelievably well, then it's worthwhile. It's worth the money that I'm paying. Are you with me? So yes. We must always look, price is what you pay, value is what you get. They're not always related. And we must look at even that as a ratio. If we can put it into some form of ratio, what's the price I pay compared to the value I get? And you go for the one where you get greater value. And so you look at a business like Apple Computers, their business philosophy is charging more, but they're saying you're getting better value. And so, so you can actually even charge more if you're adding that extra value or if it's something unique.
Thank you.
Right. Any other questions? Because if you haven't got any questions, I'm kind of done with my bit.
Yes, David.
Thank you. Yes, Franz.
Yes, yeah. You know, what comes in my mind, it's the most puzzling part is the operations, like arriving to a certain value due to your operations. I think, yeah, that's the most puzzling process, whereby, as you mentioned earlier, that at least you need a year to monitor how to value your business. And then along the way, developing that operations to suit the value at the service that you are providing. I don't know if you can help out with.
Yeah. So if let's say I'm a psychologist and I rent a house or I rent an office, and it costs me 100,000 Rand for the year, and I only see one client, then my cost for that client is 100,000 Rand. And I can never charge enough money to be able to make it worthwhile financially. But if I get, over the year, I get 100,000 clients, then my cost is only 1 Rand per client. And so it's difficult when you start a business, and this is one of the challenges with a business, it's very difficult to know upfront how many clients I'm going to get and what proportion of that cost do I split over it. And so the important thing with that when you're starting a business is maybe to do what we call break-even analysis. And break-even analysis is looking at all your costs, and then before you do it, say, in order for this to be successful based on the costs that I know, I need to then see 20 clients. So my break-even point will be 20 clients. That if I see less than 20, I'm going to be losing money. If I see more than 20 clients, then I can start making money. And then you look at your business and say, what's the chances or what's the potential that I can get more than 20 clients? And if I think, wow, I can see about 50 clients, then it's definitely worth going. If I think, wow, it's going to be difficult for me to get more clients, more than, if I can only get 15 clients, then it might not be worth your while to do the business. So, Philip, to answer, maybe it's a long way around, but to answer your question, is you'd need to do all these costs and see at what point would I reach break even? How many projects or clients would I need to use? And do I, in the current environment, is it plausible that I'm going to get that?
Right, thank you.
Great, thanks. Philip, I see you've got a question. Please recap RONO. Please recap turnover, profit, cash flow in terms of vanity and reality. Okay, so it's not RONO, but it's RONA, which is RONA, return on net assets. So there are different ways of looking at it, and different companies would look at it. It's just your return. It's the money you're getting in on the assets that you've invested. And some people call it return on ROI, even return on investment. So what you're really looking at is whatever your business decision is, what's it costing me and what am I going to get out of it? And you need to see as a percentage. So, and this is more for long-term investments. It's so, as I said in the beginning, when I gave that example of my daughter's business, is a timing issue. So I might invest now, but it's something that's going to be in the business for 10 years. I'm never going to make the money back just in the first year. But what do I want that return to be in kind of per year with that? And then your other one that you asked, the turnover. So that one is, the saying is, turnover is vanity, profit is sanity, but cash flow or cash is reality. So you've got to go from the vanity to the sanity, but never forget the reality. Great. Any other questions, guys? So I think our time is almost up.
Dave, thank you so much. What I took away from this, it's the little things that make the difference, the little things that make or break you. It's those things that you either forget to look at that affect, well, your cash flow, and you don't actually realize why there's less money than there should be. Pay attention to detail. I think from the lecture, that's what I took away. Thank you.
Great.
And thank you for your time. Thank you for your insight.
Thank you.
And thank you for sharing your knowledge with us.
Excellent. Thank you. Thank you so much. And guys, everybody, I hope, will take something else out of this that will be useful for you. So thank you. Thanks so much.
Please, everybody, thank you to those who did donate in the first poll. We'd like to put the poll up again. As mentioned earlier, ORT is an NGO. We rely very heavily on the support from the people that we are partnering with, such as yourselves. Please give generously. Thank you. Should you want to re-watch the presentation, it will be sent to you, probably from Tracy's email address a little bit later. And you're also able to watch it on YouTube. There are a lot of videos on YouTube of different content as well. Please make use of the learning channel. It's really valuable.